2025 was a reset year for Indian startups. Global capital pulled back, domestic money stepped up, AI hype met ROI reality, the growth at all cost era snapped, 18 new age tech companies went public, and public market cap reached close to $150 billion, making 2026 not about more money, but about better money. Here's how we think the next 12 months will really play out. First, capital. Funding has settled around the $11 billion zone, close to the pre-2021 normal, not those funding bubble years where every decent pitch deck got a check. The real shift is who's writing these checks. A large share is coming from Indian family offices and HNIs, so startups are less dependent on foreign funds. Next, profitability will stop being a later milestone and become the entry ticket. Investors are asking sharper questions on EBITDA, revenue quality, and unit economics, even at the early stage. Showing big GMV and fancy dashboards without a path to profit won't fly in 2026. Third, exit playbooks are going to see a drastic change. Roughly 48 startups are lining up for IPOs. SMEs listings are quietly outperforming, and mergers and acquisition is about buying capabilities and moats, not just logos. We are also seeing more secondary deals. More investors want them, and by the end of 2026, more founders will use them as planned liquidity and not panic buttons. On sectors, the tide won't lift everyone. Quick commerce will be in its final land grab. Fintech will win on compliance and collections. D2C and retail will chase lifetime value and not discount-led spikes. Gaming will focus on monetization after the RMG ban. EVs will be about fleets and infra, and food deliveries will trade growth stories for margin discipline. And AI enters its reality check. Pretty wrappers on top of open models will fade. The AI that survives will be practical, built on proprietary data and deep domain understanding and clear business impact. Better collections, lower fraud, higher conversion, and real cost saves. Underneath all this, deep tech, semiconductors, clean tech, and AI-first teams become long-term plays. Capital is there, but talent and execution will decide who survives. 2026 will be less about who can grow fast and more about who can endure. Capital will stay with companies that treat profitability, unit economics, and execution depth as defaults, not talking points.